everyone. Welcome to Arise News. You're watching the Global Business Report. I'm Rosa Sodiri, coming to you from Nigeria's commercial capital, Lagos. Let's take a look at the stories currently making headlines across the business world today. U.S. President Joe Biden has rolled out a vaccine mandate affecting all employers with more than 100 workers, requiring them to be vaccinated or tested for the virus weekly. It's affecting about 80 million Americans. The United Nations says freezing billions in Afghanistan assets could worsen the humanitarian crisis, cause an economic collapse, and set the country back for generations. E-commerce giant Amazon is offering free university education for more than 750,000 U.S. employees as the battle for hourly workers escalates beyond minimum wage. And the NNPC, in an exclusive Arise News interviews, forecasts 300 billion naira in profit for full year 2021. It's the Global Business Report. Do stay tuned. All right, start off with the markets here. Asian markets upbeat. Taking a look at the Shanghai Composite Index, the Nikkei 225, the Kospi, the Hang Seng. There we are, all up 27 basis points for the Shanghai Composite Index. The Hang Seng was up by 1.19% over in Hong Kong. The Nikkei 225 in Japan up by 1.25%. The Kospi 36 basis points in the green zone. Take a look at oil prices. Brent crude up by 1.43%, $72.47 a barrel. 1.47% increase for West Texas Intermediate, $69.14 a barrel. UK GDP news for the month of July. The UK economy grew by 0.1% in July on a month-on-month basis, worse than 0.6% expected. Industrial production in July, however, expanded by 1.2%, better than the 0.4% growth expected and the monthly contraction of 0.7% in June. Can a phone call solve simmering tensions between the world's two largest economies? Well, Chinese President Xi Jinping spoke with his U.S. counterpart Joe Biden on Thursday, their first call in 7 months. Both leaders discussed the responsibility of both nations to ensure competition does not veer into conflict. Arise business analyst Bode Oshoshimi joins us now from London. Good morning to you, Bode. Markets look like they're celebrating this renewed dialogue between Xi Jinping and Biden. Are we reading too much into the phone call?
Well, the 90-minute telephone call initiated by Biden, and of course, the fact that it's initiated by Biden suggests Biden has blinked first in this game. The reality is that I think China can afford to wait because it has better resolve, I think, and cohesion in this war. The U.S., of course, is under pressure. Biden is under pressure to achieve some breakthrough of his own in this geopolitical warfare with China. And he wants to move things faster. It's obvious the lower level talks are not yielding much. But given the fact that these are perhaps much more complex times geopolitically, one can understand why he hasn't had as much time to give to China with Afghanistan of recent and so on. But the way Chinese media are reporting it, they say the call was broad, candid, in-depth, and covered many strategic themes about China-U.S. ties. And they also said U.S. policy on China is imposing great difficulties on China-U.S. relations. That's like saying it's the fault of the U.S. and China is waiting for the U.S. to take corrective action. But I think we have to wait and see what goes on. My summary is that nothing has changed. China is slowly gaining the upper hand, I suspect, even as the U.S. seems to be floundering, given Afghanistan and its intensely divided possessions in Congress on almost everything. But getting used to a new reality is important for the U.S. in the sense that it has more limited ability to change China and globally influence partners.
Looking at global stocks this morning, what are we seeing? What are the market triggers? Looks like the week ended on a soft note. Or started on a soft note, rather.
Stocks, indeed. Stocks are nursing a comeback. Of course, it started on a soft note, but it seems that it's going to end much better, given what we are getting. There was dovish central bank commentary yesterday. That is from the ECB. Traders are expecting the fact that Lagarde said that she's not tapering, although this recalibration does sound a bit like tapering. They're expecting a more accommodative environment, and the clever wordsmithing we got from the ECB, even though some of the forecasts like inflation was increased, they are now looking at inflation at 2.2 instead of 1.9%. The dilemma for the ECB, of course, is similar to that of the Fed Reserve. How will it end potentially inflationary support without crashing markets? In the US, although jobless claims improved, new jobless claims, people losing jobs are all over 25% more than what we saw before pre-COVID. So the situation is still not exactly over, particularly with the Delta surge and so on. But I suspect the week will end somewhat mixed, reflecting better sentiment than the earlier part of the week. When we get inflation data from the US later today, we'll get more clues as to what it's looking like. In the UK, we got economic data for July. The bounce back also in the economy looks like it's waning due to a combination of upsurge in cases across the UK and, of course, this supply chain crisis. So to summarize, I would say markets are in a good mood, but still vigilant to the lingering risks.
All right, buddy, thank you so much. Do hang around. I have a couple of headlines to go through here. E-commerce giant Amazon is offering to pay college tuition for more than 750,000 U.S. employees as the battle for hourly workers escalates beyond minimum wage. Amazon said Thursday it will cover the cost of tuition and books for staff pursuing bachelor's degrees at various universities nationwide. Hourly employees will be eligible for the new perk after 90 days on the job. Employees working as little as 20 hours a week will be eligible for the college benefit, though Amazon will pay 50% of the college costs for part-time staffers. Amazon will pay tuition and fees up front instead of reimbursing employees later. The company said the estimated cost would be about $1.2 billion by 2025. Facebook has hopped into the smart glasses arena. The company unveiled its long-awaited smart glasses in partnership with Ray-Ban, with a focus on capturing photos rather than augmented reality. The social network on Thursday showed off the glasses called Ray-Ban Stories, a direct rival to Snapchat's Spectacles. The $299 Facebook glasses lets users take photos and video and listen to music and answer phone calls. U.S. President Joe Biden said on Thursday laid out a mandate that all employers with more than 100 workers require them to be vaccinated or tested for the virus weekly, affecting about 80 million Americans. And the roughly 17 million workers at health facilities that receive federal Medicare or Medicaid also will have to be fully vaccinated. Biden is also signing an executive order to require vaccination for employees of the executive branch and contractors who do business with the federal government with no option to test out. That covers several million more workers. We bring back Arise business analyst Bode Oshoshimi still with us. Bode, what do you make of this decision by Biden to order workers to get vaccinated? Is it enforceable?
Well, business groups largely favor the effort to get their staff vaccinated to prevent the spread of the virus, but they are still digesting the order, asking for more details, especially as several questions and anxieties are there. But of course, employees, I understand, could face fines of nearly $14,000, and companies. That, of course, is harrowing. It could be an issue for a lot of companies. As you know, after enduring months of the lockdown, new costs for masks, hand sanitizer, plexiglass barriers, expensive safety protocols, now you have this new compliance around the vaccine at a time when you have labor shortages and supply chain concerns. So this could heighten concerns and tensions. I prefer a pull approach rather than a push, especially with all the political division and distrust and on a matter as delicate as vaccines. And history teaches us you really can't force people to take medicines and vaccinations, and trying to penalize or criminalize resistance can be self-defeating, even backfiring. So let's watch it. It's a space that will develop as more details unfold.
Great stuff. Also, I want to get your take on Amazon boosting morale here, offering free tuition. This is going to catch on as new perks for workers?
I think it will. It's very, very exciting development, I think. Staff engagement and trust, Reuters, is in the workplace is now the critical advantage area in the post-pandemic era. You just have to get it right with your staff. And it's not just about money, about compensation. The carrot and stick approach doesn't work anymore. Staff shortages are there. people are having to engage staff and find out what they want. And this education area, I think, is something that would appeal. And many others are already doing it. Walmart offered to pay the cost of tuition and books for its staffers. About 1.5 million people, I understand, are eligible even for that. So I think it's going to catch on as analysts see more of these staff-focused initiatives to boost trust and retention in the marketplace.
Great stuff. And Facebook, what else do we know about these new intelligent glasses? And will you be picking some up and updating yours by any chance?
For a steep £300, very, 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 very unlikely. I don't think I need to listen to music or watching movies through my glasses. But Facebook is not targeting me. It would be great, especially if you're working with the Secret Service or you have money to burn. Facebook now wants to be in your face, literally. And with this product, I think you're going to have issues with privacy. They have said they are going to introduce a button that you can switch it off very quickly. Obviously, you don't want anyone photographing or videoing you without your consent. And there's a white light that shines that you are able to know that you're being videoed. But of course, this may not be enough from a privacy concern. But it's still interesting. I guess the younger ones will find this another gadget to run for, especially if they're not paying for it. But we'll see how this unfolds. Clearly, it's an attempt to just get into this market, copying another product that Snapchat's spectacles. Facebook are saying they just want to really strengthen their market presence in this area.
All right, business analyst Buddy Oshoshimi. Buddy, thanks for taking us through the headlines. You're watching the Global Business Report here on Arise News. We have more for you after the break. Stay tuned. Welcome back to the Global Business Report on Arise News. Let's talk digital financial services in Nigeria. Prosper, a Y Combinator-backed Nigerian fintech startup offering software and financial services to entrepreneurs and micro businesses, has announced it closed a $3.8 million pre-seed investment. The round was backed by venture funds Global Founders Capital and Liquid 2 Ventures. Joining us to discuss that, plus digital financial trends as far as Nigeria is concerned, is Ade Adegbusi, an analyst with Financial Derivatives Company Limited. Ade, good morning to you. Thank you so much for joining us. What do you make of the Prosper news?
It's a very good initiative by Prosper to give 3.8 million to SMEs, because some of these companies, they do not have enough capital to get loans from banks. And with this initiative, it helps them, it helps stimulate recovery by these companies.
And as far as digital trends are concerned, with where we see things, I guess the state of digital lending and so on in Nigeria, what's the landscape looking like?
Digitalization has become the standard for financial and credit services right now. With a few clicks on your phone, you can apply for a loan and get money as quick as a few minutes. And with the effects of the pandemic, people have lost jobs, there has been dwindling economic recovery, and now with digitalization, you can get money with just a click of your phone. So yes, so with that in place, now you can see fintechs and banks, they've been able to tap into the demand for these services by providing easy-to-use applications that run like a normal social media.
Right.
The digital service platform in Nigeria, they are mostly saturated by fintechs. So in Nigeria, there's been an increase in mobile phone penetration, and these fintechs, they're able to utilize that.
Okay, great stuff. As far as I think money circulation now, money supply is what, 38, 39, 40 trillion naira. So how does that, if you look at circulation of money supply, how does that blend in with digital lending and what the services that these fintechs are providing?
Digital lending in Nigeria, there's a huge prospect for it to increase because people prefer easier access to this money. And now with digital lending, although people still prefer to go to their banks,
Okay.
People still, with the fact that digital lenders, there's no collateral. Some of them offer no collateral.
Yes, that's correct. You're right. Yeah.
People, now SMEs, like how Prosper is doing. Since you cannot get money from banks, you can go to your people like Carbon, Fair Money, rent money, they can give you these loans.
Okay, great stuff. Now, as far as digital lending you mentioned banks, as far as it cannibalizing traditional banking services, how do you weigh the two? Why do you even agree that it can cannibalize banking services? How do you weigh traditional banking with what the digital players are offering?
Yes, I believe it is a huge threat to the traditional banking sector we all know now.
Okay.
Because now, people prefer the ease of access to the money that we can get from your online platforms, from your houses. But then banks are not going to give up the market so easily, because now they have started making online services. They have been striving to improve their digital experience. But now we have Access Bank, they have QuickBooks, GT Banks, they have Quick Cash, FCMB, they have Fast Cash as well. And keep in mind that banks have a lot more capital than these fintech institutions, and they have been in the business for a longer period of time.
Very true.
Which gives them a bigger advantage over these institutions.
What about, we got about a minute to go, what about the threats of cyber attacks, safety when it comes to digital lending side? We're putting all our private information here to get access to these digital lending. What's your take on, as far as the safety side of things are concerned, cyber attacks? How do we keep things safe, or how do you think that plays out going forward?
With digitalization, there's always a threat of cyber attacks. And with these fintechs, with the high amount of information and data they keep, there's always an attractiveness to criminals. And however, these fintech companies, they spend a lot of money to provide highly complex and sophisticated systems to prevent hacking from these criminals, to protect confidentiality of information, their clients' information.
Great stuff. We'll have to see how things play out. Ade Adeguse, financial derivatives analyst with Financial Derivatives Company Limited. Thank you so much for joining us to talk digital banking. You're watching the Global Business Report here on Rise News. We'll have more for you after the break. Stay tuned. Income inequality slows economic growth, and reducing income inequality is a top priority in the public and private sector around the world. Our next guest is one of the U.S. NASDAQ Stock Exchange's 2021 milestone makers, who was selected on the criteria of reducing inequality through entrepreneurship. Reducing inequality, of course, is one of the United Nations Sustainable Development Goals. Ifeoma Uddoh. Uddoh is the founder and CEO of Shecluded, which works to help female entrepreneurs understand and easily access essential financial services. Good morning. Thank you so much for joining us.
Good morning. Thank you so much for having me.
Fantastic stuff. How large would you say the inequality gap between male and female-led businesses is?
So let's put it into perspective on a global level.
Yeah.
Women account for 58 to 61% of female entrepreneurs around the world. And when you look at financing, 98% of financing go to male-led businesses, leaving only 2% for female-led businesses. And there is a narrative that most female-led businesses are MSME. So if you look at the numbers, it's very clear to see that since finance is a very key part of why businesses actually succeed, most female-led businesses don't actually get the opportunity globally to get funding to actually grow their businesses. So they stay small.
Is the gap larger when you look at developing nations, like where we are?
Yes, unfortunately, it is larger, because when you think about financing, equity financing is one of them. But when you come globally and when you come locally, even assessing things like credit, assessing things like information on investment, it's still very, very hard and difficult for women to be able to do it. I mean, for us, for the company that we run, we find that we working with women entrepreneurs, they actually don't even meet the criteria for bank loans, and they've been running these businesses for over 3-4 years. And when you ask them to put together the requirements for a loan, they actually don't know how to go about it. So yes, it is.
Is access to financial services the #1 route to reducing income inequality?
So we know that economic inequalities is the biggest thing when you come to inequalities. So access to finance is one of the key parts to it, because economic inequalities is the biggest thing when it comes to inequalities between the gender gap. And if you're able to deal with it, it gives women the right to live the quality of life they want to live. It gives them the right to their body. When you talk about things like making good decisions for your children, when you come to things about saying the quality of life you deserve, when you come to things about like even development of the nation and stuff. So yes, it is.
And what about knowledge of financial services? Because I mean, before you can access it, you gotta know what you're accessing. So what about that? What about the role that plays?
That plays a very, very key role because financial literacy, as it is, in the simple term, is just being able to know and use financial services to your advantage, whether it is credit, whether it is health insurance. I mean, from the work that we do, I was surprised that when we started working with female entrepreneurs and I said health insurance, they said, what is health insurance?
What?
And it just occurred to me that I knew health insurance because I was employed in the formal sector. Most women actually just start very early in their career. They work with small business and they progress to start their own company. So they don't even know that health insurance, you can pay a token and actually be covered for a year. So yes, having knowledge to even know that we meet people and they say credit is something that, oh, their mother got broke. And I said, hi, credit is and should be a business decision. And it shouldn't be about emotion. It should be about, hi, what is the ROI on this for me? Does it make sense? And it's not about what you feel about it. So yes, being able to be literate enough to know that you can use any financial services to your advantage is very, very key for this.
Now, your company primarily focused on getting female entrepreneurs access to finance. How badly were they impacted, at least as from the female entrepreneurs you've dealt with? How badly were they impacted by the pandemic?
So talk about the fact that most female entrepreneurs are MSME, and when you close a country or a business or you root for a long time, it means that the first people to be impacted are the people at the bottom of the pyramid. So that actually happened. Then talk about the fact that most of them had to stay at home, they had kids, they had family. Talk about the fact that there was pressure on the family system and things like domestic violence came to play. Things like homeschooling your children. So you're homeschooling your children and you're working. So the number of hours for unpaid labor went high. And for most of them, even after the pandemic, they found out that everything has gone tech. They were not tech-enabled. So they had to start thinking of how do we pivot our strategy? How do we create new strategies? Do we even still have a business there? And that's something that during the pandemic, we were very, very excited to help some of them go through that whole phase.
As far as the help that you offer, are you picking any entrepreneur off the street, or is there a minimum bar to who it is that you assist with getting these not only knowledge of finance, but also access to it as well?
So knowledge of finance for us is free. I mean, we do it through most of our social media channels. And I mean, a few people come in and ask us a few questions and stuff. But in terms of the people that we finance, as we have evolved over the years, we've sort of like defined who our ideal customer is to reduce our risk, in terms, especially in terms of business loans and stuff. But in terms of like other services, maybe health insurance and stuff, we're more lenient. I mean, anybody on the street that feels, hi, I want to understand and assess health insurance, you come to us and we give you. But in terms of different services have different minimum requirements to be able to meet them. But ultimately, what we try to do is that we're a bit more flexible and more accessible than the more established financial institutions.
All right, so how risky, since you mentioned loans, we have to get there. How risky can things get when it comes, because this is, you meant earlier, one of your earlier answers, you were talking about how entrepreneurs have issues, at least female entrepreneurs, getting loans from banks, right? So there's a risk transfer, where that risk is transferred to you since you're helping out. So how dicey does it get?
So, I mean, in terms of risk, when it comes to credit, I think the risk is risk. So in terms of female entrepreneurs, I think that we have used the social characteristics for women to our advantage in terms of things like they like communities, or who in your community can vouch for you. Things like understanding the fact that, hi, so in 2021, you need to have this plug so that if you need money, you always come to this plug. But having said that, we have a set of algorithms that over time we're testing to make sure that, hey, who is the perfect person for us? And we've quickly evolved it. So for example, I know that when I started, one of the key demographics that caught to me was like stay-at-home mom. I wanted to say, gosh, let's help these people. I mean, some of them want to do more, but they kind of are stuck. And after trying a few, I got my hands burnt. Then, I mean, when this happens for us at this stage, remember we're a startup. It means that I learned new data. I learned why they are the way they are. I learned the things that I feel like, oh, if I'm to go back to that demographics, I would do better.
And you wouldn't get burnt. If you were to go back, knowing what you know now, if you were to take that back in time, you're saying that things would have turned out better.
Yeah, it would have turned out better than it did at that time.
Okay.
So yeah, I think like there is risk, but we are learning very quickly to be able to say, hi, what can we do to improve this risk? Because it just doesn't make sense. Nigeria is a population of, when you look at the data, it's almost 50% men and 50% women.
Right.
And we are growing at a rate of over like 2.6% annually. And when you look at the population of Nigeria, a lot of people are under 24. And women seem to be the doorway. So it just makes business sense to know that if women don't get empowered, we are in trouble. An empowered woman, for example, like I was raised by a single mom.
Oh, okay.
My dad died when I was 9. And I look at it, every time I look at my nanny or I stay in people's house and see a nanny, I know that was me. But my mother saved me because she gave me an education and because she put me in opportunities that said, hi, you need to get a school, you need to work in big consulting companies. And I went and got a scholarship and went for my master's and I came back. So if women don't get the opportunity to take their role as the doorway to the next generation of youths for Nigeria, there's a key problem. It doesn't make business sense to leave those people broke. It's like building a big house in Banana Island and paying your gate man 5,000 naira.
Gotcha.
That's an
excellent. It has to trickle down. It has to trickle down. So, I mean, you mentioned algorithms. As far as getting paid back, do you have like a metric, like non-performing loans and so on and so forth? How does that work out?
I mean, during the pandemic, it was high. I think for us, the backlog of our non-performing loans are the loans that happened during the pandemic and stuff. They're performing now. But it's not at the pace that they want.
With what you're doing, you're in the private sector, clearly, startup and so on. If you look at the overall picture here with what the United Nations is trying to do, and did I say congrats already to the UN? Excuse me. Milestone. The NASDAQ. Congrats on that. Is this whole the mission here? Is the public sector also involved as far as the reduction in inequality is concerned?
Well, when I hear a lot of people talking about like investing in women, I still know that there's a lot more talk than do. And as with every breakthrough, it seems to be that's the trend. People talk a lot, then after a while, they now start catching up into the doing and stuff. So. Private sector, I've seen like a number of international agencies actually go as far as putting certain gender funds to be able to get more women into different sectors. And in terms of us working with public sector, that hasn't happened yet.
Oh, it hasn't?
But we're looking at that.
Okay, but as far as the talking versus the doing, why do you think that is? Is it like, because look, this is expensive stuff, right? And you've also talked about the risk with the loans part, which is access to finance is very high up there. So why do you think that is? Why is there more talking than doing? Is it a money issue?
So I feel that, just being an entrepreneur and looking at the numbers at the end of the day, it's about a business decision. It says that a particular gender over time has controlled the largest amount of financing.
Right.
So,
And you can say men, that's fine. It's a fact, it is what it is.
I'm always not I run a company called Shecluded. So
right, which is very specific.
I tend to be always, I'm always in this sort of like, so why men?
Right.
So I'm always like, gosh, I believe clearly in a world where men and women are equal to assess opportunities available to them.
Right.
And I feel that my goal to start this company is because I feel that more women need to be brought on, especially they need more effort to be brought in, and that's just it. I feel that the world needs both men and women energy. So I'm not anti-men or anti-women. I believe in a balanced world. So let's put that down. So in terms of, back to your question, in terms of...
in terms of the fact that there's more talking than doing, is it as a result of a lack of
No, it just makes sense. It's money. Everybody pays attention to if this is generating you money, why would you go and waste your time on that there?
Right.
It's just it just makes business sense at the end of the day. And it's not that maybe many people have not said trying, is that, okay, I mean, this still makes money. And remember, we just came out from a pandemic. Most companies, unfortunately, are still trying to get back to their rhythm to see what's actually happening and stuff. So it's something that will catch on, I believe.
Yeah. And I guess a couple minutes to go here, but going forward, is because where the economy is, we're just coming out of a recession. I know we're 5.5% GDP growth Q2, but is the landscape going forward, as the year closes and we go into 2022, how challenging is what you're trying to do as far as like getting more women finance and reducing inequality?
I mean, we've seen, so for us as a company, we've pivoted so many first. We've started so many first. I mean, we just started... we just finished a training with agro-commodity traders that were women because my friend is the CEO of a company called TOFA, which is commodity trading. And we looked at her data and she said, oh, everybody there's men, that women is less than 1%. And I said, hi, can we bring in women so that we'll fund them? And we just finished this training. And I know that I was shocked to go for the training and see all the women from the north.
Wow.
They traveled all the way
down.
And I was shocked. And, you know, when I heard their stories to say, hi, people come and they farm soya milk, soya beans. And, you know, when they don't get off-takers immediately, they carry it to her and say...
No off-taker, sorry to interrupt. That is something that keeps coming up when we talk about agriculture in this country. Yeah. No off-taker. So we got to go. But great conversation. Ifeoma Uddoh, head of Shecluded. Thanks for joining us.
Thank you.